Our next guest sees more risk market downside from here. Joining me now, post-9, Avery Sheffield, CIO and Senior Portfolio Manager at VantageRock's. Nice to see you again. Welcome back.
Great to be here.
We've had a day,
yes,
right?
A day, a week, a month.
Yeah. What's it tell you about where this market's going?
Well, I mean, I am worried about potential weakness ahead because you have the combination of still high valuations across many stocks, still high expectations, and an economy that is more uncertain than it's been in the past.
You feel, has your view sort of gotten a little more dour about where you think the market can go as a result of all of that?
Yes. I mean, I've been concerned that the market is set up for asymmetry to the downside for a while, but you didn't have near-term catalysts. But now with the signs of consumer sentiment weakening, the Atlanta Fed GDP potentially negative. I mean, that's certainly due to a lot of a potentially pull forward of imports. But, business commentary and conference calls are speaking about the uncertainty businesses are feeling about the political environment, and that's leading them to pull back. I think that we could see some wobbling of economic weakness, and that set against the valuations just makes me a bit more concerned.
What do you make of, speaking of valuation, how a part of the market that was more richly valued than another, obviously, the momentum factor, has reset itself without causing a massive disruption to the overall market? That's a good sign.
It is actually a good sign. And so when you talk about the market as a whole, I think there is certainly a question mark of how much inexpensive defensives, inexpensive cyclical stocks that have maybe even a lot of political uncertainty priced in could actually outperform if rates come down, and those specific businesses end up being more, on the defensive side, more defensive than anticipated. But does that offset, downside from the mega caps, some of which are still richly valued, even with the recent pullback? So I don't know how that works out, but I do think there are opportunities to the upside. I'm not bearish on every stock out there by a long shot.
Sure, but if you think that there's going to be maybe a more pronounced, if not prolonged, sort of period here of weakness in the economy, that has the chance of upsetting a broadening trade that there were a lot of believers in.
It does have that chance, for sure. And we have seen a lot of companies, especially on the cyclical side, that have been pricing in a Goldilocks scenario. So they're very expensive on current earnings with the expectation that rates will come down in a benign way because inflation will come off without any real economic weakness. And we think there's a lot of vulnerability there. And yet there are still maybe fewer, to your point, defensive stocks that are inexpensive and don't face political risks, as well as cyclicals that are in a unique position if rates come down.
Yeah, what do you make of the more defensive posture, tone, tenor of the trade, right? The staples doing so well, healthcare waking up after a couple of sleepy years. Those aren't exactly, I'm feeling great about the marketplace.
Right, they're not. And actually, I think those might not be as safe places to hang out on the defensive side. So staples, especially in food, with the threat of SNAP payments, with concern over health and GLP-1s and processed foods and beverages that are high in sugar, like those might be vulnerable. Traditionally, they've been defensive, but if people are going to buy more fresh food, which isn't mostly publicly traded, they might not be as defensive. And then on the healthcare side, with DOGE and with the HHS having a very different political view on healthcare, those might not be as safe. But I think there are other defensive places in the market that you can look.